G'day everybody, welcome along to this Monday afternoon market recap. It's James here on behalf of Pivot Point Trading. I just wanted to say, first of all, I hope you are doing well. You are looking after yourself and your loved ones and your neighbors, no matter where you are located around the world. There's probably a high degree of probability at this particular point that you are in some form of a partial or full lockdown. This, of course, is due to those SCurve accelerations, whereby I guess governments around the world, countries, municipalities, are trying to slow this part of this pandemic. It's whereby the total amount of cases in that area, what they're trying to do is essentially slow it and then, of course, move into what they call a hammer and sort of dance, whereby the curve itself can actually cope with the inundation, or at least the stresses in the health system, until where upon a time, and this is linking this back into the current cases in Italy, whereby it plateaus and then it starts to dance or at least mellow out to the right. So again, a lot of the countries around the world are still going through that actual S acceleration, whereby, again, if you front run this or at least look forward, it attempts, or at least it seems to be another 7 or so weeks until we expect to see the true flattening of the curve. All right, so that's just a little bit of an update. Again, pay attention to what's happening in Italy, of course, South Korea too, and I know obviously you have to take this as a grain of salt, but China as well, and just to see the province of Wuhan snap back to life as quickly as what it has, even I guess taking into consideration the shutdowns that have been in effect since very early on in the period of January too. We are going to move beyond this. We are going to be okay. However, at this particular point, this is where, again, we're moving into accelerated shutdowns in an attempt to actually stop the spread of this virus around the world, especially in certain parts of the United States on the east and also the west coast. Look into those S-curve accelerations. They are going to stop, and as such, these new cases are going to mellow out at some particular point, most likely within the next 2 months. And then we may start to see a little bit of normalcy come back into our everyday lives. But obviously what I'm here to do, I'm no medical expert, but just having a look at some of the studies, that's really what we're looking at this point in time. That's what I believe anyway the market's trying to price in. To me, it's as though, all right, when we're looking at the technical picture, that the net momentum to the downside, at least on this first wave, is really starting to slow. It's now been more or less 6 trading sessions whereby we haven't really seen a major continuation in downward sort of price trajectory and momentum as to what we began to see at the beginning of this wave rotation to the downside. Let me explain this a little bit further. Obviously, today in the United States, we saw the markets down collectively. However, right, on the S&P 500, we were only down a further 67 points. And I say only 67 points because, number one, it's not really pushing out to the degree of 10%, and it sure is not it's testing those limits of 5 to 6%, but it seems as though we're really starting to slow down, and we're not really seeing the base of this market, or the disintegration upon which that we saw very earlier on at the beginning of this wave. So what this is telling me is that naturally we're going to be extremely oversold, and that's exactly the point. That's exactly the case when it comes to these oscillating indicators. In fact, we haven't been this oversold really since the depths of very early on in the period of 2009, and again where the bottom fell out of the market in September, October of 2008. Okay, so again, we're really pushing on this. This is the daily time frame, the S&P 500. You can see the RSI coiling, the stochastics coiling. The MACD itself just makes these positive momentums, or at least thrust to the upside, as we saw that bullish trend continuation right up until the point of February. Just looked like absolutely nothing. I mean, you can just see how deep this is. The reason I'm going through this with you is because over the weekend in that pro analysis class, we had a pretty serious discussion about what to look for moving forward. And our analysis, I can say here publicly, it has shifted, and it's just leveled with people, or at least I leveled with people over the weekend to say that, look, we've given this market every attempt, right, to actually stabilize and to prove us wrong. But now it really looks as though we're moving down that recessionary sort of outlook, all right, more than ever. And any bounce that we are going to get, again, is going to be a clearing rally that is ultimately going to fail. We went into great depths and detail as to why that is, and some of those, or at least more or less the entirety of those economic data sets that we've been paying attention to right up until the point whereby we saw, again, this sort of flash crash take place in response to this pandemic. This is really, in my opinion, the pin that's pricked the bubble. A lot of people, and again, I just wanted to say you should really jump into that class and have a look at it. It was an hour and 40 minutes. A lot of this economic data points are really going to smooth out just where we are in this process now that we believe there has been a macro trend reversal take place, or we are in the midst of a macro trend reversal. Just wanted to point out, I don't think it's in your best interest to be trading short at this time, nor is it in your best interest to really be taking a long sort of approach to the market immediately. Yes, we are extremely oversold, and yes, this is going to turn into some form of a cleaning rally. But really what I believe is under construction, we went into detail as to why this is that this really appears to be a left shoulder, and this is on a macro time frame. Essentially, we're down here at the neckline, although we are temporarily, below that. We're assuming that we are going to see a bounce, and what we've created essentially in the back very early on in 2020 is now that head. So if we do see that clearing rally up until about 3,000 or 2.9, that is going to create now that of the right shoulder. We've gone into detail as to why that is in the economic data that supports that, unfortunately, for all of the wrong reasons. But now's the time to not have, false optimism in this market recovering. I mean, yes, it is going to recover. Technically, we can assume that maybe 50 to 60, maybe 70% of this low, once it does really sort of be priced in, is going to be made back, but that is only going to be temporary. And I assume, again, a lot of this movement is going to be tied into what people are calling the defeat of this pandemic, which makes a lot of sense too. But historically anyway, recessions themselves, although this we consider it's been brought forward, they do linger, and they do linger up for 24, even further, 24 months. All right, so a lot of people are going to tie into the optimism, the sort of the bounce in equity prices into, all right, things getting back to normal. But generally speaking, there is a severe hangover, not to mention, of course, some of the changes globally speaking that we are seeing in economic activity and what that means, even in the labor market at a minimum. Of course, a lot of businesses at this particular point outside of Fed funding are really struggling. We'll see what fiscal policy, and there's just so much fiscal policy being promised at this point, not to mention, of course, central banks around the world more or less moving in synchrony with one another, really trying to sort of offset a lot of this downturn at this particular point. But really your mindset, it needs to change from someone who's looking at the markets on a day-to-day or a week-to-week approach and allowing, first of all, this market to stabilize, right? Somewhere down at these historically low levels. I mean, we haven't been trading back at these levels. If I go out and show you this on the S&P, I mean, we haven't been here since 2016, which is quite a ways away. If you look at the Australian market for that instance, I mean, we're back at 2009 levels, which has been a complete, complete hammer, all right, being absolutely clubbed, our market down here in Australia. But we're not necessarily concerned with that. I'm just pointing it out too. But when it comes back to the US financial market indices, right, I assume right now that we're down very close to, if not over 40% at this particular time, we are going to see 50% more or less of those losses made back. I think that's going to tie into the US election, which is going to be sort of that carrot being dangled in front of a lot of people, a lot of politicians, again, promising a lot of people a lot of things. People are going to assume that this is the worst of this sell-off, that it's a very quick sell-off, a V bottom. At that particular point, though, we're going to be very skeptical about a legitimate clearing rally, and we're going to intertwine this with, well, what is the 200-day simple moving average looking like in response to price action? How is that magnet going to operate into the future, and is that going to be a legitimate resistance area and sell-side location for these markets moving forward? So there's a lot happening at this particular point. Okay, what we need to do first of all is move through, obviously, these lockdowns to understand how long they're going to be in effect for. And there's collectively, anyways, a society, a lot of decisions that are going to be made as to whether or not these businesses, small businesses, are going to remain closed, or whether or not we are going to see, again, these restrictions hold out for much longer. Hopefully, these restrictions are going to stop the spread of this, which is going to give at least the medical infrastructure time to prep, and also potentially a vaccine to come out early on in the year 2022, because the last thing you want is herd inoculation, because at that point essentially you've lost the game. Even though of course the critical and the ICU admissions as a percentage are very low, that means a lot of fatalities, which no one wants to. So again, there's a lot of unknown at this particular point. When there's unknown, there's going to be a lot of uncertainty in the charts. When there's uncertainty, a lot of people are going to sell. My biggest concern, though, and again, I went into detail in this over the weekend, was that once we do move through these S-curve accelerations, I think people again are going to tie into the equity price bounces into the recovery. That recovery, however, it's not going to be, or at least the recession itself, it's not going to be short-lived. I think there is going to be a little bit of a hangover to this. And that's really going to catch a lot of people out at higher prices when they start to see the markets moving up on higher. We're going to track along with this or through this with you. I'm not going anywhere. But again, I really encourage you to have a look into that analysis class and just to be on the same page as us, because we've given, again, the markets every attempt and every opportunity to prove us wrong. right? We were looking at this as a correction back into the primary macro trend, but once we break below these primary macro trends, they're going to act as resistance. That's just the reality and the application of these concepts. And if you project this out far enough, into 2020, you really start to see, right, a head and shoulders pattern develop on not only the Dow, but you see it on the S&P 500 up here, and you see it also on the Nasdaq as well, which is going to price in essentially a 3-year macro reversal pattern. If this top up here is the significant top, is the head of that construction. So again, you can see it on the Nasdaq. It's up here about 8,000 points, trading down here at 6,800. It makes a lot of sense that we are going to see a clearing rally. Everyone's going to get excited about that, and then that's going to create obviously the neckline as well. So be very careful about that. We're going to talk more about that moving forward, and it's really starting to become a lot clearer now that we've seen the depths to which these markets have sold off. All right, I'm going to leave it at that, everyone. Please join that pro analysis class. I'm not going anywhere. I think it's going to be very valuable for you to map along with that. If you have any questions, email me, success@pivotpoint-trading.com. Outside of that, everyone, I'm going to leave it as this. As at Monday, I'll be back with you later in the week for some more market addresses. All right, farewell.